What's up, investors? Welcome back to the channel where we hunt monsters under $5 and look for the next AI winners that could 5x, 10x, or even more. If you're tired of watching mega cap AI names go up while your portfolio barely moves on, today's video is a must-watch because we're diving into the best AI penny stocks to buy now in the USA market. Stocks that are actually trading under $5 with real AI tech, real catalysts, and real potential for explosive growth. Whether you're a seasoned trader or a beginner looking for your first high-risk, high-reward win, today you're going to learn about companies that have actual AI products, partnerships, revenue growth, and catalysts on the horizon. And we're breaking down why these names could go parabolic. I'm talking about opportunities where the risk is high, but so is the potential. So if you're ready to chase real small cap AI growth, stick around. Before we get into the meat of this video, you already know what to do. Smash that like button. Let's aim for 500 likes on this one. Hit subscribe and turn on that bell so you don't miss any future stock breakdowns like this. We drop high conviction, deep dive stock ideas multiple times a week, and you don't want to miss a single one. Disclaimer. Quick and important. I'm not a financial advisor, and none of this is financial advice. All trades carry risk, especially penny stocks, which can be extremely volatile. You must do your own due diligence before making any investment decisions. Always research further, consider your risk tolerance, and consult with professionals if needed. All right, let's go. Today, we're covering a range of AI-oriented penny stocks, from voice AI to decision intelligence systems and biotech AI, each with a compelling narrative and upcoming catalysts. We're talking about stocks typically under $5, but with potential that could explode if the AI market continues its relentless adoption. 1. SoundHound AI. Let's kick things off with one of the most talked about AI penny stocks in the market right now. SoundHound AI builds conversational voice AI systems that go beyond simple voice recognition. This is not your grandma's voice bot. SoundHound's technology interprets context, understands accents, handles orders, and integrates deeply with devices across automotive, restaurant, healthcare, and consumer markets. So what makes SoundHound compelling? First, the industry opportunity here is massive. Voice interfaces are being integrated into everything from smart cars to drive-through ordering systems. SoundHound's tech is already powering voice assistants for major manufacturers and service providers. Their most recent data showed multiple consecutive quarters of accelerating revenue growth, including some periods with triple-digit top-line increases. That's huge volume for a small-cap AI company. As of the latest data, Sound trades in penny territory, making it accessible for nimble traders, and analysts who cover the name have buy ratings and higher price targets based on adoption curves. Why it's undervalued. Despite real growth and real partnerships, the stock has pulled back from prior highs, creating a possible entry point. Market sentiment, as we know, fluctuates, but fundamentals in the AI voice tech niche are strengthening. Catalysts to watch. If SoundHound lands additional OEM deals with global car manufacturers or expands deployments in high-volume verticals like food services and consumer electronics, that could trigger a re-rating. This is exactly the kind of small-cap AI story that, if execution continues and adoption grows, could shock the market. 2. BigBear.ai. Next up is BigBear. AI. A stock that often gets attention because it actually makes money from government contracts. BigBear. AI provides AI-driven decision intelligence solutions. In plain English, they use machine learning and predictive analytics to help organizations, especially in defense, cybersecurity, logistics, and intelligence, make smarter decisions. Industry and opportunity. Defense agencies and big data users are flooding toward AI systems that simplify complexity and predict outcomes. BigBear. AI is there, and they are actively contracting with branches of the US government. That's huge. Their market cap, still in penny stock territory, reflects a company transitioning from loss to growth with revenue increases and backlog contracts that could drive future revenue expansions. Why undervalued? Investors often overlook defense AI names in favor of flashy consumer AI. But defense contracts are recurring, stable, and often multi-year, providing predictable revenue. BigBear. AI has long-term bookings that suggest future growth, catalysts on the horizon. Big Bear has partnerships with L3 Harris Technologies and integration work on Army systems that are scheduled to scale in the next reporting cycles. That's exactly the kind of institutional validation that can drive share price higher. Analysts have set price targets above current levels, suggesting over 50% upside, if execution holds. Potential parabolic move, defense, plus AI, plus data analytics. That's not a niche that disappears, it grows. If Big Bear, AI becomes a go-to for government decision intelligence, this little stock could be on everyone's radar. 3. GuardForce AI. If you're looking for ultra-low entry, GuardForce AI trades at or below $1. This company leverages AI in robotics, security, and autonomous service solutions, deploying robotic guards and automated support systems in real-world environments like malls, airports, and logistical hubs. The AI market here, automation and robotic security, is a rapidly expanding industry. As labor costs rise and corporations look for precision monitoring, robots with AI capability are becoming a logical solution. Why undervalued? With its stock trading very low, GuardForce AI's valuation reflects early-stage adoption, but low price doesn't mean low tech. It means opportunity if adoption catches up. They've been expanding internationally, another sign they're not just a local play. Catalysts. World events have governments looking at tech security solutions. Any major municipal contract or big box retail deployment could send this ticker running. Again, this is speculative, but these are exactly the setups traders look for when hunting for big runners. 4. Lantern Pharma. Here's a twist. Lantern Pharma is not traditional voice AI or robotics. This is AI in biotech, and it's one of the smartest plays for investors who love catalyst-driven runs. Lantern uses its proprietary AI system to speed up drug discovery for oncology treatments, literally plugging machine learning into medicine. Industry upside. Healthcare AI is massive. And if Lantern SAI platform accelerates drug trials or identifies new therapeutic pathways faster than competition, the outcomes are huge on both scientific and economic fronts. Why undervalued? As a small cap with AI biotech traction, Lantern S market valuation doesn't yet reflect the potential revenue explosion if one of its drug candidates moves into late-stage trials. Catalysts to watch. FDA announcements, trial results, strategic partnerships with larger pharma. Any of these could be stock-moving events. Biotech plus AI is a potent combo, and while the risk is real, so is the reward if breakthroughs come. 5. Veritone. Veritone is a slightly more established AI play that at times dips into penny territory. Veritone provides AI operating systems that help enterprises interpret and automate data. Think AI for media, public sector analytics, and legal transcription. Industry opportunity. As enterprises seek operational AI, companies with AI operating systems, especially ones that integrate multiple AI models, have a big runway. Undervalued? Despite deeper liquidity and better institutional access than some ultra-micro caps, Veritone AS shares trade relatively lower compared to growth peers, showing that retail investors might still be underestimating its future. Catalysts, product launches, enterprise contracts, expansion into international markets, all could shine a brighter spotlight on this neglected ticker. 6. Bullfrog AI. Bullfrog AI is small, microcap, and deeply speculative, but it leverages AI ML for healthcare data analytics, a space that grows every year as healthcare digitizes. The company's platform aims to accelerate clinical and preclinical data analysis. Licensing agreements with major universities provide credibility and potential future revenue, and the tiny share count means even modest institutional interest could drive big moves. Why it could go parabolic? If healthcare AI becomes a must-have for research institutions, early microcap players with real tech like Bullfrog are often first in line for strategic buyouts or acquisition premiums. Why these stocks could go parabolic? You might be wondering, what makes a penny stock go parabolic? It's not just hype, it's real catalysts, institutional adoption, earnings acceleration, major partnerships, and market narratives. All the stocks we discussed have at least one, and often several. Government AI contracts, healthcare AI breakthroughs, enterprise AI adoption, strategic alliances with larger tech firms, upcoming earnings, backlog revenue expansions. And remember, AI isn't going away. It's being embedded into every industry on Earth. So these small caps could be early beneficiaries of a trend that's just beginning. Now I want to hear from you. Which stock on this list is your favorite? Which one do you think has the best shot at 10x? Rank these names in the comments from most likely to explode to least. Remember, this is not financial advice. Do your own research and make your own calls. If you enjoyed this deep dive into the best AI penny stocks to buy now, hit like, subscribe, and follow me on Twitter, X, for real-time updates and trade ideas. Stay sharp, stay curious, and always be ready to spot the next big breakout before everyone else. Until next time, keep hunting those hidden gems.